You know, when most people think about crypto, they probably picture late-night traders, staring at glowing charts, or just a lot of hype on social media. But behind all that noise, there's a much bigger, much quieter shift happening.
And that bigger thing is this. Wall Street is moving in. Welcome back to the channel, Finance People. If you're new here, a hearty welcome from the JoshLM Finance crew. I'll be your teacher today, so get your pen and pad out and let's break this down. Today, we're going to unpack this whole institutional takeover of crypto, what it is, why it's happening now, and, most importantly, what it means for the future of finance and for you.
Okay, here's our game plan for today. First, we're going to talk about how crypto is, well, finally growing up. Then, we'll look at who's actually stepping into the ring. We're talking the big institutions. After that, we have to cover the absolute game changer, Bitcoin ETFs. We'll also touch on how regulation is finally creating some rules for the road. Then we'll see how all this tech is starting to blend into everyday finance, and we'll wrap it all up with what this means for you.
All right, first up, crypto is growing up. To really get where this is all headed, you have to appreciate just how far we've come. We're talking about a journey from the absolute Wild West all the way to Wall Street.
Think back not too long ago. Crypto really felt like the Wild West, didn't it? I mean, you had unregulated exchanges, meme coins popping up left and right, and just a ton of that to-the-moon hype. But the change we're seeing now it's huge. We're moving away from that pure short-term speculation and into long-term allocation. It's becoming less of a casino and more of a real new asset class that serious players are strategically positioning themselves in.
I saw this quote and it captures it perfectly. It's like that rebellious teenager who finally went out and got a real job. Yeah, they're still a little unpredictable, a bit wild, but now they're wearing a suit. They're being taken seriously.
And of course, once that teenager puts on a suit, people start to notice. Which brings us right to our next point. The smart money is finally starting to arrive.
Now, this is a really important number to understand. We're not talking about a pension fund YOLOing everything into Bitcoin. No way. They're making very small, very calculated allocations. We're talking maybe 1 to 2% of their portfolio. But here's the kicker. When a fund manages $100 billion, 1% is $1 billion. $1 billion. That's a massive wave of new capital flowing into the space, even if it looks like a small ripple on the surface.
So, you might be asking, why are they even bothering? Well, a few key reasons. They're looking for diversification, something that doesn't just go up and down with the stock market. Some see it as a hedge against inflation and monetary policy, and of course, they want some exposure to the actual blockchain technology itself. But honestly, the biggest reason is that last one on the list. They can finally get access through regulated, easy-to-use products. We're going to get into that in just a sec, but hey, really quick, if you're finding this breakdown useful, do me a favor and hit that like button. It seriously helps us on our journey to 1,000 subscribers. Thank you.
So, that point about regulated products, that brings us to what was probably the single biggest development in this whole story, the creation of a real, legitimate on-ramp for Wall Street.
Before these spot Bitcoin ETFs came along, it was a total headache for a big institution. I mean, they had to figure out these weird crypto exchanges, deal with self-custody, which means holding their own digital keys. One wrong move and millions could just vanish. The risk was just way too high. But now, after the ETFs, it's as easy as buying a share of any stock. They just use their normal brokerage account, the assets are held by massive, regulated companies, and it's a simple click and buy. All of that friction, all that risk, it's just gone.
And you have to understand, when the biggest names in the entire financial world, we're talking giants like BlackRock and Fidelity, put their brand on a product, it sends a massive signal to everyone. The message couldn't have been clearer. Crypto is now open for business within traditional finance.
Okay, so having a product from BlackRock is huge, but it's not the whole story. The other piece of the puzzle that institutions desperately needed was regulation. For years, the lack of clear rules was basically a giant stop sign holding them back.
See, institutions need to know the rules of the game before they're willing to play. They hate uncertainty more than anything. So the fact that lawmakers are finally getting serious about creating clear frameworks, like what's a security versus a commodity? How should exchanges be run? How do we regulate stablecoins? That is a massive green light for them.
And a really good way to think about this is that regulation isn't really a barrier. It's more like putting up road signs and traffic lights on a brand new highway. They're not there to stop you from driving. They're there to organize everything so traffic can flow safely and efficiently.
All right, so we've got the institutions, we've got the ETFs, and the regulators are all moving in the same direction. And this is where it starts to get really interesting, because this isn't just about crypto as something you buy and sell anymore.
This is about the technology itself becoming part of the financial plumbing.
We're seeing this happen in a few different ways. First, you've got stablecoins being used for payments and transfers. These are basically just digital dollars. Second, there's this idea of tokenizing real-world assets. Just imagine owning a tiny digital piece of a skyscraper or a famous painting. That's where we're headed. Third, even the big traditional banks are looking at blockchain to make their own systems faster and cheaper. And finally, financial advisors are actually starting to talk about small crypto allocations with their clients. The end goal here is that one day, you might be using this technology without even realizing it, kind of like how you don't think about the internet protocols when you send an email.
So let's tie this all together. With all these huge changes going on, what does this actually mean for you, for the average person trying to make sense of it all?
Well, I think the single biggest takeaway is that crypto is on a journey. It is moving from the absolute fringes of the financial system.
And it's becoming a part of the system itself. Now, this is so important to understand. That change gets rid of certain kinds of risks, like the risk of it just disappearing or being too hard to access. But, and this is a big but, it does not get rid of market risk. This stuff is still volatile, it is still risky.
So the smart playbook here has nothing to do with chasing the next hot coin. It's about putting your education first. It's about practicing prudent risk management, meaning you only put in what you can truly afford to see go down. It's about understanding that this is a long-term shift, not a get-rich-quick thing. And that means learning to tune out all that short-term, day-to-day hype.
So, at the end of the day, crypto isn't going away. It's just integrating. It's maturing from retail speculation into institutional allocation. And that leaves all of us with a really important question to think about. The financial system is changing right in front of us. Are you prepared? Thanks for sticking with me till the end. It shows how important financial literacy is to you. Clearly you got value from this, so do me a favor and share it with someone like you, and I'll see you in the next video. Also, let me know your thoughts or any questions you have in the comments below. I read all of them.